All right, welcome everybody. Doug here with the LincolnList.com. This is the stock market weekly review for the 21st of March. Hard to believe the first quarter of the year is almost in the books. It's been a good start to the year, I have to say. Our accounts are up over 60% already year to date, so it looks like it's going to be another great year. So if you're looking to take your trading game to the next level, you're looking to grow as a trader and become consistently profitable, because that's what it's all about. I mean, everybody can trip up here every once in a while and catch a lucky break, even though sometimes it seems like you can't. Everybody can get lucky. Everybody can be good in a bull market, or some people can be very good in a bear market. But to be good in all phases of all markets, that's what you're striving for, is consistency. So if you're looking to add that to your game, you're looking to stick around in this industry for the long haul, visit the LincolnList.com, take a 14-day free trial to our live on-screen trading room, see for yourself about our educational level. Now let's talk a little bit about the SPY. I didn't do one last week. I was coming back from Vegas, so it got a little bit late. But we're now at the point where this thing has been in a melt-up. It has bounced viciously off of this 182, certainly a lot further than I ever expected it to. I did not expect it to just continue to melt up. Now it's gotten to the point where it's melted up so much, it's just downright annoying to me. It's taken away a lot of the intraday volatility that we had a couple of weeks ago, and I'm sure the market goes through its cycle, so this too, as they say, shall pass. And what a melt up this has been. I mean, it ran up into the Fed on Wednesday, and it just seems like this thing just keeps going up and up and up in a serious grind. So as we look at it, we're now at this 203.90s, 204, filling in the gap. Now, despite of all the stuff that happened in January, remember, the world is going to end. China's going upside down. The world is over. It was over in January. Here you are at the end of the March, and the markets are positive for the year. It's a beautiful thing, right? So as we look a little bit further, this gap fill right now could be some resistance. I think, the market could use a little bit of a pullback here, but I thought that last week, and that's one thing you'll learn as a trader. What you think and what ends up happening are always two separate things. That's why you have to have a plan. If we look up here, this from the very later parts of the year, you got a little bit of resistance, so between 208s and 207s, and then possibly as we look up here a little further. And of course, if this continues, we might actually see 210. As I said, I thought seeing something like 210 anytime during the course of the year might have been impossible, but what do I know, right? There you go. Market's melted right back up. Again, I think we need to see a little bit of pullback here, so we'll see how the week progresses. In turn, this has created some monstrous moves in some stocks. And I think first, going into the week, we've got to take a look at this Tesla. Just like the market, I mean, this thing has made a tremendous bounce off of the lows. This thing looks like it's had about 140 green days in a row. I mean, what a V-shaped bounce. I mean, you've seen this everywhere across the board. I'd be willing to take anything but a melt up. Now, I like to usually short stocks once they've gapped up, a certain percentage in the day. But this, just on sheer movement, this thing is up really, about $100 over the last couple of weeks, and you're getting very, very close to this 242 resistance. I'd just be willing to start going into this on any kind of pop. If there's any kind of strength in the morning, any kind of gap up, I'm not so sure in this market you're going to get a gap up. That's one of the things that we haven't seen, unless it's been earnings related or PR related. We haven't really seen a whole lot of the gap ups. There's been a couple of verticals here and there. So it's unlikely to gap up. It's more likely to continue to do what I'm saying. And when I'm saying gap up, I'm not talking about something 50 or 60 cents. That's not really a gap up in a Tesla. But, it might have a small gap or like that, and then it just kind of just continues to grind it out for most of the day. So I'd be willing, if there was a chance where it got vertical, like a move like this, I'd be willing to start into a short. As I said, you're probably not going to get a gap up to begin the day at 240. That would be nice if that was a scenario that would play out. But we'll watch this one. I mean, this is something that has to get put up here on the list, I think, as a short, just for the amount of time that this thing has gone up and the consistent amount of green days. As I said, you're looking at $100 here really over the last couple of weeks. Great, impressive bounce for Tesla, but perhaps at this point, the easy money has been made on this trade. It's time to look at profiting possibly on any kind of a pullback. Also, we have this LXU here. Let me pull up this chart real quick. A lot of these little cheapies have been running. This thing's also, percent-wise, is up over 100% since their earnings announcement. Nice little vertical move. And this is what I was saying. We've seen a lot of those vertical moves a couple of weeks ago, actually the whole year, but you'd get a little bit deeper pull in those names versus what you're seeing now. Now they're just kind of pulling back slightly and they're grinding back up, or they're making new highs later in the day, as this one did. This is something that could gap up a little bit more. You've got resistance here going into the gap fill roughly at around 16. So I'd like to see this thing try one more time, or not try one more time, but actually make a solid attempt going into 16, then try to look possibly for a short. I think, there could be some buying in this, intraday trading off of the dips. There are some interesting setups. That's not my style in particular, but if that's what you're looking for, you possibly could. Although I think, like I said with Tesla, the easy money has been made on that trade. You're getting into a stock that's up over 100% in a couple of weeks. So how much more percentage you're going to get out of it in that cycle remains to be seen. Now these things certainly can be impressive. This is a stock that used to be up towards 45s, So this is an impressive little bounce here. So let's kind of watch that. I like the way it looks here on the daily. I'd like to get a gap up to short into. If this thing doesn't do that, it's just not something I'm interested in shorting. I don't want to short into the red. I don't think you can do that right now with the way this market is, because if you get down into the red, into the hole now, you're going to get squeezed on. I mean, these stocks are bouncing viciously off the bottom, or they're just showing a couple of reds, and then they're snapping back. So LXU, definitely one to watch here. Same could be said with this Party City. I mean, who knew that the next coming of great stocks is party planning or party supplies? This thing originally started back here, about a month ago in the 7. So, we're another 100% mover from the bottom coming up here. And of course, it ran up into earnings. Earnings obviously were impressive. And now you're kind of floating up here. You don't have any resistance till about the 1645s. But just like everything, or the theme that we're talking about, you're looking at how these stocks are trading very close to how the SPY. You're in a V-shaped recovery here, where you had all that selling in January and most of February, and then all of a sudden this really sharp snapback. And some of these have gotten extended beyond their near-term moving averages. So when you're looking at a stock like this here on your daily chart, you got this yellow line is the 10-day moving average, 20 moving average. Some of the shorter-term moving averages, these are way above those levels. So we're going to see how this reacts. I think this one is, we're talking about 100% gainers, just like LXU over the course of a couple of weeks. You got to start thinking about a backside move here. You got to start thinking about some profit taking on any kind of red day in the market is going to send some of these down. Now, whether we get that or not, I don't know. But after such an impressive, strong run-up, just like we mentioned with the market, you're probably going to see a pullback here sometime during the course of the week. Good opportunity to capitalize. With any of these stocks that would gap up, I would be completely into them short. WDC is another one. I mean, this one here could go either way. It hasn't quite made the impressive bounce off of the bottom that you've seen with the others. You had a really strong Friday. Again, another stock that didn't really pull back that much. The thing about this one, though, is you're pretty close to a nice little flag breakout at the 50 level. So if this thing can build a few days around that level, and you see some similar action as you did Friday, where you've got some big rips and minimal pullbacks, you can actually see this thing once it moves above, if it does move above 50. You can see it to start to, this is a good resistance level, this mid-50s. You're going all the way back to the beginning of the year here. You could see a little run into the mid-50s, up to the upper area of 60s. Nice little flag pattern here working. So it could go either way. If you get a strong gap up, I'd of course be more inclined to short it for a day trade. But it is building a pretty nice pattern here in the high 40s. So let's just kind of watch a little bit of this WDC. And then last, I'll put a little shop of horror here. Another one that looks a lot like LXU, right? And Party City, where another one is just kind of follow the market. 20 to 28, certainly not the the highest percentage gain that I've showed you today, but another one here that possibly could be looked at as a short. You got resistance here into the 29s, which is not too far away, but another impressive run off the bottom. And I think with these, you're going to see some kind of retracement. How much that's going to be, who knows? We're going to have to sit around and find out. So anyway, there's a few stocks that'll help you at least put something together for Monday, but you never know. I mean, the market, you can wake up one day and all the stuff that you planned and you prepared for is different. That's why as a trader, you've got to have multiple plans. because the same thing doesn't work every day of the week. The market's unique, it's different. Just because it goes up doesn't mean there's a lot of stocks that are going up. Just because it's down, you know exactly what I'm saying here. Some outsiders will look at numbers and say market's green, it must be good. Well, there's internals. So the internals of the market change every day. Having said that, as I mentioned at the beginning, if you're looking to take your game to another level, you're struggling, the market's throwing you for a loop, you find yourselves in these periods of great trades only to follow it up with some terrible trades or one or two terrible trades, and it's taken away all of this good work you've done. You need some help. There's a lot of educational services out there. If you don't use me, find somebody that has a style that you like that can get you to that level. If you want to visit the link in this, as I said, there's a 14-day free trial. Feel free to stop by and visit us. Trade live with us every day. As always, thanks for watching this video. Have a great week of trading. Take care of yourself. Talk to you soon.